Eventually, nearly everyone will bend a fender. Many of our homes will suffer roof damage from a storm. Less likely, but more calamitous, is the loss of our home by fire, or a $100,000 judgment for negligent driving, or for a slippery front porch. Accidents do happen, and if you can't afford the financial loss, you would be wise to place a bet with an insurance company that one will happen. What do you think this is called? Of course. We don't call buying insurance gambling, but in effect it is like hedging a bet. Some risks can't be insured, but many can, and Americans spend over $50 billion for property and liability insurance each year. All of us collect property which can be lost or destroyed, but many of us have little idea of its dollar value. For proof of loss to an insurance company, you need an inventory. This is a list of your furnishings, clothing, and equipment. You may need special coverage for some business and off-road recreational equipment, valuable antiques, and expensive jewelry. And you may not be covered at all for some rare hazards like floods, earthquakes, and wars. What is a list of insured items called? Correct. Someday you may accidentally hurt some individuals or damage their property. Then you'll need protection from their claims. What kind of insurance is this? Yes. A big judgment against you could take all your assets. Just defending yourself against a lawsuit is expensive, even if you're not found liable. Insurance companies determine the premiums by calculating risks. Which do you think is more expensive? Right. Intentionally hitting someone or destroying property is a crime. But almost always the injury and damage we cause is accidental, often negligently so. If you're so reckless that you don't act like a reasonable person, you can be considered negligent. To be liable, you not only must have been negligent, but you must also have had some duty or obligation to the injured person. An invited guest, for example, slips and falls on your snow-covered porch. But an injured person may have no claim if he or she accepted some clear risk or was clearly negligent too. What factors tend to make you liable? Most losses are less than total, like roof damage or a fire in one room. But if your total property is worth $100,000 and you buy only $50,000 of insurance, intending to save money by covering only the common smaller losses, you may be caught by something called co-insurance. This provision requires you to insure the property for a certain percentage, say 80% of its value. Otherwise, the company will pay only a portion of smaller losses. What is the name of this provision? Right. Homeowners insurance, HO1, HO2,
HO3, and HO5, and renter's insurance, HO4 and HO6, offer different coverages, with HO1 the least. Compare costs and coverage. They're different in various states and companies. Section 1 of homeowners' policies specifies, by inclusion or exclusion, the perils against which home and contents are insured, which gives the least coverage. Right. Section 2 covers a homeowner's liability to others for possible negligence related to the home. It covers property left at your home and personal injuries from, say, falling trees or fires if you were negligent. A homeowner's policy normally insures your house, garage, shrubs, and personal property wherever you take it. But there's no coverage for business property, pets, cars, or motorbikes, although bicycles and power mowers may be covered. If you had your overcoat stolen at a Moscow restaurant, would it be covered? Yes. Your homeowner's policy may also cover some indirect expenses, such as living expenses while your home is repaired, or the loss of frozen food if your power is knocked out by lightning while you're away. Coverage on contents is usually based on actual cash value, replacement cost minus depreciation. The house itself is usually covered for replacement costs. Besides direct losses, what else may be covered? Yes. You need to be sure your insurance provides sufficient coverage. You may be shocked at the difference between the replacement cost and the depreciated cash value of used but useful items. The liability limits of homeowners' policies are often $250 for the property of others, $500 per person for medical payment, and $25,000 total personal liability to others. Higher limits are often desirable, especially if you're wealthy, or can reduce your premiums by taking out $100 to $500 deductible. The property that creates the greatest risk for most of us is our car. Our own negligence or that of others may cause us serious losses or injury. What can we increase to save on insurance premiums?
I said. No.
Yes. Each year, automobile accidents result in 50,000 deaths, 2 million serious injuries, and a loss of $40 billion. There is a price for rapid private transportation, and compared to travel by bus, train, or airplane, it's terribly high. If it weren't for a general decline in death rates per vehicle mile, the continually increasing vehicle mileage would have resulted in more deaths. Lower speeds in the 1970s saved lives, but smaller cars may slightly increase the risk of serious injury and fatality. How much money is lost each year because of automobile accidents? Yes. If you drive, you should carry insurance, at least liability. If, like most of us, you buy your car with an installment loan, your lender will require that you also have comprehensive loss and collision insurance. If you cause an automobile accident, your liability insurance company will defend you in civil court if necessary and will pay whatever sum you've become obligated for, up to a predetermined limit. But your insurer does not defend you against criminal charges. Most automobile liability policies provide limits of at least $5,000 per person and $10,000 per accident or bodily injuries. Limits for property damage liability are typically $10,000 to $25,000. Of course, you pay higher premiums for higher limits. Some policies will reimburse you for incidental expenses and bail bonds. If your liability loss is greater than your limit, who pays the difference? Right. Although automobile liability insurance covers the licensed drivers in a household, regardless of whose car they're driving, policies are written primarily to cover insured automobiles. If your friend borrows your car and causes an accident, whose insurance is the first to cover it? Correct. If you have uninsured motorists coverage, you may collect from your own company for injuries that you receive as the result of an uninsured driver's negligence. In many states, no-fault insurance is common as an alternative to liability insurance. No-fault insurance pays the insured no matter who was at fault. This may speed up payments, but some abuse of this concept tends to increase costs and premiums. Your collision insurance covers the cost of collision damage to your car, regardless of who is at fault. If your 18-year-old son was driving, would this probably still be true? Yes. Comprehensive insurance protects you from fire, theft, vandalism, and most other losses, except personal property left in the car. You can save on the premiums for collision and comprehensive insurance if you increase the deductible and pay for minor damage yourself. Lenders on cars require collision and comprehensive insurance. Both drivers and the driving environment strongly affect automobile accident losses, so the community where a car is driven influences the amount of the premium. Auto insurance is several times as high in New York City and Los Angeles as in some other locations. What insurance do lenders require? Right. A 20-year-old single man is much more likely to have an accident than an older married person. And the average collision cost for a Volkswagen Scirocco is nearly 3 times that for a Buick Skylark. What factors do you think affect premium rates? Yes. Half of all fatal automobile accidents involve alcohol, and many companies offer discounts to non-drinkers. What do you think is another important factor affecting your insurance premium? Right. Besides homeowners and auto insurance, there are a number of other property and liability policies. Floater policies for personal property, personal and professional liability, and boat, mobile home, earthquake, and flood insurance. Insurance makes it possible to protect yourself from most of the calamities of life.